Welcome to the Gold Newsletter Podcast, your bank of knowledge of investment, economics, and geopolitics. Go to goldnewsletter.com for our publications and archives.
Fergus Hodgson, your host. Glad to be with you. Please hit that subscribe button on YouTube, SoundCloud, wherever you are, BitChute. I'm always glad to also have Brian London, my host. We have a friend of the program, Chris Marcus of Arcadia Economics, and he has experience as an equity options trader. He's a Wharton MBA grad, and he had a change of heart after the subprime collapse. And now he has his own financial show, Arcadia Economics, and he's big on buying, selling, storing precious metals, in particular silver trading. Chris, I got to meet you in New Orleans. Glad to chat. Welcome. Excellent, mate.
Well, it was a pleasure then. It was a pleasure to meet you back then. Great to see both you guys now, and certainly at a very fascinating time. I mean, I don't know, maybe every day is fascinating in the markets, but I mean, I think we're really on the verge of some historic things happening right now. So it's really great to be here. And I might add, I was reading a new book I got yesterday, which is actually an old book by Paul Sarnoff, who I'm sure, Brian, you're familiar with.
Oh, absolutely.
Fergus, have you heard of Paul Sarnoff?
You have to inform me, Chris. I'm sorry.
He's one of the old school legends. I heard about him in Jerome Smith's book. And geez, Brian, you should see in Paul Sarnoff's book. I was kind of new to him, and I always wonder. I don't know if it's different if you're reading one author.
What's the title of the book?
I think Silver Bulls or something like that. But in the front cover, before you see the other books he's read, I'm like, oh my God. I mean, he looks like pretty impressive guy. And then it wasn't too far in, I'm skimming through, and Jim Blanchard comes up, and he's talking about this guy, Jim Blanchard, who apparently knew something about gold all the way back then and was creating a great conference. So I'll be excited to continue reading more about that.
Yeah, and Chris, Jim was the icon, the original gold bug, silver bug, everything. And really, when I got into this business in mid-1985 as a junior copywriter, Jim kind of took me under his wing, and I got to really rub shoulders and talk to a lot of these people who were just historic giants, a lot of whom, obviously, like Jim, aren't around anymore. So I had a tremendous education back then, and there were so many people whose names are legend now who were just coming up in the market. I remember I remarked to James Turk on Twitter the other day that I remember when he first started writing his letter, and I started reading it. At the time, he was doing it anonymously because he was a money manager in the Mideast, talking about gold, et cetera. And a lot of these people, Timothy Green and everything else, coming out and writing on the metals. And there are so many parallels you'd be very pleased to see from the early 70s to what we see today. And I was just remarking to Fergus before we came on air, talking about you, that you're kind of like the guy in the Civil War who's at the forefront carrying the battle flag on this battle forward.
Right on.
A hail of bullets coming your way. And you're doing it on a daily basis on Twitter and through your YouTube channel. And I was so glad to be featured on your show the other day. It's just amazing the work you're doing in leading this charge of all the kind of Wall Street silver, Reddit silver, newfound silver bugs. And like it was in the early 70s when things were just spinning out of control, because, you could now buy gold and silver and they were untethered to the dollar for the first time. There was a sense not just of a profit motive, but of a cause, and that this was the way to protect yourself from what was about to come. And here we are, right back again in a new cause here, and you're just doing tremendous work. And I really have to congratulate you and thank you for what you're doing and kind of helping coalesce this cause.
Well, thank you, Brian. That is certainly quite honored to hear you say that. Especially, I've your conference has played a big role in my journey where, I don't know, when I was back on the trading floor back 2009, 2010, 2011, this all started, the guy who trained me, he sent me a Peter Schiff video, April of 2009. And I remember it was April 1st because I had just taken a vacation out to San Diego. And I guess maybe that's how you end up overdosing on silver if you go to San Diego for a vacation and that's the first time you listen to Peter Schiff and you're like, wow, this makes sense.
All came together.
And then actually, I guess I'd met him before, but interviewed him both years that I was at your conference. And actually, the last year I was at the conference in person, which I guess would have been 2019, right?
Yeah.
And that's when I met you, Fergus. Remember, we're in that aisle in the middle. And I'd just been watching the week before, and even that year before when I came. I always liked football, and I liked these Steve Sable, the NFL Films documentaries, and how they brought out the story of it, which here's the best part. If anyone, this could be applied to any industry, anywhere. Just you can apply to sewing, but hey, look at how Jill sews faster. Look at those strokes. And, but if it's something that anybody has interest in and anyone cares about and anyone has passion about it. And it was really when we were sitting there interviewing, he gave us that spot right in the middle aisle. I'm like, wow, it reminded me. And in fact, I walked around the block. There's the restaurant. You have ESPN Game Day for all the LSU fans. And I'm like, wow, if you just take this same concept, the same way Steve Sable did it, the same way that's what I've studied. Anyone who's been successful at almost anything, they've learned to market their ideas. They've learned to say, all right, and not try to tell people who are into something else how they're wrong, or and I mean, yeah. I think what's gone well. I'm not trying to convince the guys that love Paul Krugman or Jeff Christian to come watch this stuff. I mean, if somebody likes that, God bless them, great. But for the people who are seeing what's going on and seeing these things that are happening, if it looks bizarre to you, or if it's bizarre when you hear the commissioner of the CFTC talk about how the futures structure tamped down the price to avert Armageddon, and how someone acted to put all these things to control the price and volatility. If that seems relevant in a world where we've seen Bitcoin become a 120 bagger just since 2016, and silver is half of its 1980 high.
Yeah, and three comments on that. Number one, what you're doing is telling a story, and it is like a detective story, and that captures people's imaginations and gets them involved. Two, you're highlighting one of the key benefits of the New Orleans conference, that all these people are together. You're running into them in the halls, you're talking to them, you're having one-on-one conversations with people who are really at the forefront of thought and insights into the markets in general and a lot of the specific areas we're talking about. In three, you highlighted one of the sacrifices that I think goes underappreciated by the general market that I make on behalf of the New Orleans conference, and that I'm often missing LSU football games during the event. and no greater sacrifice has man made in recent financial history than that. But you're right. It is all part and parcel of the same thing. Everybody gets together in New Orleans. It's a real destination trip. There's this intellectual energy that permeates the halls. You're having these conversations. You're meeting these people. It's the place to be. And I guess I do mean to make a plug for it, but I'm obviously very passionate about it. And as are you about the silver story. So I want to, before we get too much in general, I'd like to see if you can, gold and silver as we speak, when we're recording this, are up very strongly. Do you think the weekend's coordinated silver attack of coordinated buying of physical silver is what's driving it now, or did it have an effect, or does it not really matter because everybody's buying silver at what should prove to be absurdly low prices?
That is a fantastic question. Although before I answer that, could I just add one more thing that I personally love about the New Orleans conference?
Yes.
If that's all right. I love that you have Bill Murphy and Chris Powell there.
Oh, yeah. Absolutely.
Especially because, I don't know, I mean, I think most of the people who sit there and listen to me talk about silver each night, somewhere in their lives, I'm imagining they've done honest things, worked hard, and then had some, like, the rest of the world tell them 2 + 2 = 5, and they've been able to persevere through a very bizarre existence like that. That's what I loved about Bill and Chris. I mean, they sit there, you have people giving them shit for years, yet I don't know, all they do is get things right. And Chris has talked about often how they continue to get things right. They document them. Most conferences uninvite them, and you're one of the few conferences where and they actually even go there in person, which is pretty awesome. So I think that says something to the character of you and people involved with the conference. Which, back to your question, obviously it's a little different than the character involved in some of the other participants in the silver market. And because I guess the short answer to your question is that it's probably a little too early to say whether the weekend that we just witnessed had an impact on today's pricing. I mean, I think it had a huge impact. I think this thing actually, in some weird way, I don't know if I've said this publicly yet, but maybe today's a good day. I felt it then. I still feel it now that the gold and silver market broke on February 2nd. We even had the CFTC commissioner confirm as much. Yeah. LBMA puts out that report, which was quite fascinating, where they said, they were like, oh my God, we were weeks away. They also point out 120 million ounces went in. They had 360 million ounces left. That didn't even add. That was only 120 was only in the ETF. So I don't know how much.
You want to back up there, but just when you say it broke, I mean, I know you're deep into silver and gold, and maybe a lot of the listeners won't be as familiar with these terms. So CFTC and the break. Do you want to just clarify what you're referring to here?
The CFTC is the Commodity Future Trading Commission, something like that. One of those government acronyms. It means nothing. They're essentially the SEC of the commodities. They're supposed to police things. And actually, you couldn't make some of this up. Well, maybe I'll leave Gensler aside. He used to be CFTC commissioner, ignored silver manipulation there. Now he's the SEC commissioner. And maybe the CFTC is trying to one-up the SEC for how brilliantly they ignored the evidence of Bernie Madoff's Ponzi scheme for years, as well documented in Harry Markopoulos's book, which I actually have here. If you want to give away a copy, I have an extra copy if you'd like to give one of those away. So, I mean, this is the regulatory agency. They do the same thing. When you send in evidence, no matter how clear it is, for whatever reasons, they ignore it. If they can ever explain that.
The Gold Newsletter is proudly sponsored by Inventa Capital Corporation, a venture capital advisory firm dedicated to the acquisition and development of assets in the natural resource sector. Today, Inventa is one of the premier mining groups with a first-rate portfolio of companies and a world-class team.
Hi, I'm Brian London, and I'm here with this month's CEO interview, wherein we interview one of the CEOs of one of the companies in the Inventa Capital Group. The Inventa Capital Group, of course, is the podcast sponsor, the sponsor of the Gold Newsletter podcast, and we're proud to have them sponsoring the podcast because this group is composed of a number of really fantastic companies. We have with us Michael Konnert, the CEO of Vizsla Resources, symbol VZLA on the Toronto Venture Exchange. Michael, we talked the last time and we were talking about how you have the Panuco project is so large and you're just scratching the surface, but you've extensively or gotten really a good foothold in exploring two of the vein corridors, Napoleon and Tajitos. And you have two more vein corridors set up behind that, plus some exploration targets outlying, and yet you still haven't even scratched the surface, pardon the pun, of this over 9,000 hectare property. one of the things we talked about last time was that you were dedicating a couple of drills to the Napoleon vein in stepping out. And one of those drills hit subsequent to our last talk with some really fantastic intersections. That was a major step out and essentially, I believe, tripled the strike length of that vein corridor. Could you fill in some of those details for us?
Yeah, I'm very happy to do that. And this has been a really fun time to be talking about Vizsla, because, we're starting to see a few things happen, but, gold now today is up, silver is up, and, we're still, Vizsla's a fundamentally better company than it was last summer, but we're still not even close to the $3 share price high that we had last summer, just on a discovery hole. Now, the project's developed quite significantly, and, we were able to finance last summer, and we brought in $30 million into the company, but we brought in great shareholders like Eric Sprott as well. And, on higher silver prices last year, we hit, $3 a share. Right now we're trading just over $2, and, we've got 8 rigs. We're well funded. We have $20 million in the bank. We've got 8 rigs turning across the district. We've made this discovery at Napoleon. Now we're drilling this resource drilling on Napoleon with 4 drill rigs just on Napoleon alone. And the dimensions are really quite impressive. And what we're seeing here is a 2-kilometer long strike length of this vein. It's down 300 meters plus at depth. It's completely open at depth, but we're seeing, the vein itself over 2 kilometers. We're drilling that now on 50-meter centers. And in the original mineralized panel that we're seeing now, a 300-meter strike just in that mineral panel, 600-meter strike on that panel, 300-meter depth, 4-meter wide vein at just under half a kilo of silver equivalent. So fantastic grades.
Yeah.
On a GT basis, that's top tier in Mexico. If we multiply the width of the vein times the grade, that's top tier. And again, this is just one part of the district. We have dozens of veins, big veins running through the property. Putting it kind of statistically, we're talking about between Napoleon and another vein, which is Tajitos, which is very close to Napoleon, but we're also resource drilling there. That's less than 5% of the overall vein extent in the district. It truly is a huge district, one that compares to, famous epithermal districts like Palmarejo or San Dimas. And so, to us as a company, it's clear that we've kind of turned a corner in the sense that we've had the exploration success. Now we're resource drilling, but at the same time, we're just getting started in this district. And the one thing, that I can suppose we might get into a little bit later is that we have a pathway to production that really sets us apart from other companies.
Yeah, that's a key thing that I always try to stress, in that a lot of these silver exploration companies, really virtually all of them, they're trying to build resources, and then they're looking to sell it to somebody who can then develop it. And it would be years before that could become a mine. In your case, you've got a situation where you've got basically a mine on site that you're part of the purchase price. You've got all the infrastructure, power, water, everything you need. So these resources are actually convertible by the company, and therefore there's an argument that it should trade at a premium to those resources because you can get into production very quickly. One of the things I think we should mention now is the last time we talked, we were kind of telling people, hey, pay attention. There's some great scout holes that are being drilled right now along strike at Napoleon, and pay attention because these are going to be coming in pretty soon. They did come in as well as I think anyone could have hoped. The share price had a very nice bump. And what we're doing now is we're saying again, listen, pay attention. This is the time to buy this stock because you're turning a corner. You've had a nice move since we last talked about it, but you're still at a fraction of what your peer group would trade for, in a fraction compared to the kind of potential you have. Again, just barely scraping the surface on the property, barely attacking or drilling the first 2 vein corridors that you have dozens of on the property.
Yeah. Our peer group, I would say in market cap terms, ranges from 3 times on the low end to 10 times our market cap right now. So I would say that there is a significant room to run, as we continue to be successful drilling Napoleon. And again, I just, it's worth highlighting just that grade and the width that we see at Napoleon. It really is that industry leader. And if you look to other silver stories that have done well in the last couple of years in Mexico, Silvercrest comes to mind. The reason that they trade at such a premium is just a grade, grade that is really quite profitable. And then we have the same GT as Silvercrest, so that I think there are clear comparisons that you can make to other companies and see how they trade. But again, there is a bit of unknown blue sky here, and that is how big is this district as a whole. So, I'm excited because I think that we're going to be here. We're going to move into production in the coming years and be able to fund the exploration and the development of this district to find out how big it is. And, like I said, it really is just early days.
Well, Michael, we're kind of at the cutting edge of this junior resource market and the junior mining stock market and silver exploration stock market, which is a subsector of all of the above. But the point being that we tend to think this has been discovered, everybody knows about it. But in fact, as you're producing these kinds of results, you're really very early in the stage. A lot of the big institutional players know Silvercrest, et cetera. Do they know you yet? Are you starting to get some kind of reaction from the big players who can really propel the share price to an entirely new level?
Well, it's really just starting. I think some of the, for Vizsla, some of the, more, let's say, savvy investors early on are starting to pick up some earlier, toehold positions, things like that. But we're really, I would say, pre-institutional on a lot of room to run on that.
So when the big money comes in, they're going to look at those comps and they're going to say, which is a big move for them. This is a stock that could be trading for a multiple, 2 or 3 times where it is now. Whereas the junior mining stock players like we are looking there and say, this has the potential to really be a 10 bagger, even from these levels. And that's what really gets our juices going. Another thing I think we need to comment on is the fact that, and you did allude to it, that gold and silver are starting to move again. I have been a big believer that we're going to get back to where we were last summer, where the junior silver stocks are absolutely on fire. If that happens, as you mentioned, you're way below where your price peaks back then, and you're a far better company. So just from the standpoint of the market sentiment improving, which it seems to be doing right now, there's a potential for a multiple in your share price right from that.
Yeah, and of course there's seasonality to these equities, and I'm always kind of comforted by the fact that I think the summer will be a great summer for these. There's a couple of things. There's seasonality, but then there's also just these massive factors that we're seeing. Lumber, corn, bacon, things like that. All of these commodities have just absolutely moonshot. And we're the fundamental ones like silver and gold, and we're seeing it in copper, but I think those are going to follow shortly. So we could see a spectacular run in the commodity prices, and at the same time on the Vizsla level, we're making this project better and better.
Yeah, and that's one of the things I've been saying in Gold Newsletter is sentiment for gold and silver have been very low, very depressed, and that's the perfect breeding ground for a new gold rally. All of the selling has been exhausted. No one is really enthusiastic. So I think we're seeing that kind of rally come back. Sentiment, I think, is going to really improve over the next few months, and that's going to launch the entire sector higher. And really high-profile, very successful companies like Vizsla Silver are going to be the biggest beneficiaries if investors can get in before that move. Michael, thank you so much. Great stuff coming from the company and from the group as well. We had great results out from Tarachi Gold, which is also in the portfolio of Inventa Capital. We'll be catching up on all of them continually through this podcast. Thanks again for visiting with us today.
Thank you, Brian. I appreciate it. Always look forward to it.
Yeah, I can summarize it very quickly for our audience who may not be aware of it. On February 2nd, we had the Silver Reddit crowd. You had them focused on GameStop and the like. Well, they supposedly, some offshoot of that Reddit crowd decided to focus on silver and get everybody to buy silver. And what happened was silver prices jumped, and then the pros came in and squashed it like a bug, and the price just dropped the next couple of days, despite the fact that everybody was buying silver. And only in retrospect did we get evidence from the London Bullion Market Association, which accidentally apparently approved a report by an independent group that said the silver supplies in London came perilously close to running dry on the backs of that, and that it took essentially a coordinated effort by the powers that be to stop that effort. And then the CFTC chairman actually noted, accidentally apparently, in a follow-up interview, that they did have to really act to tampen the price rise in silver, which is obviously a market, the enemies of price discovery, admitting you are the enemies of price discovery, because this demand isn't approved. It isn't from your usual suspects, your cronies. Supposedly they represent all investors, but obviously they only represent the pros, because the demand was coming from little retail investors who are not in the club. So they had to push that aside and organize. And it's amazing that he came out and admitted this. And what Chris is doing is trying to hold their feet to the fire and just trying to get the guy to say, WTF, what do you mean by tamping the price? Why are you trying to alter price discovery in this commodity? Doesn't matter where demand comes from. Demand is demand. So
I'm guessing by the look on Fergus's face as you said that he's not used to this new brand of regulatory administration.
Yeah, look, Chris, I just want you to be more precise, because I've heard both sides of the argument on these issues. And when you say the silver market broke in February, just clarify what you mean by broke.
I think they're give me a second.
Maybe
the thing was about to soar.
Mm-hmm.
A series of felonies had to be committed to prevent it from soaring, and an extensive cover-up campaign was also part of it. And I've documented all of it. I can't get any of the people that I accuse of the fraud. I've offered to give them a chance to defend themselves or say I'm wrong, or I offered the lawyers my contact information if they're interested in the discovery process. I'm just some guy. I'm just a dude with a dog and a YouTube channel. This is Goldman Sachs, this is CFTC, U.S. government, and went to Washington. I can't get. So we were going to see there's no short squeeze, impossible. We saw it happening, and they had to cheat. Same way, they had to do the same thing in 1980 and 2011. And I don't know, why did the price just go up exactly $1? Then it gets to $27 and just stops. So it goes up $1 in about 4 minutes, and then it's priced in perfectly. The price is smooth. I don't know. Was that and then I'll put some, just to get the quote correct. Commissioner Benham talked about how the market structure of the futures market acted to tamp down the price. So I don't know. Is it because there's a lot of stops and the banks just hammered it out? Or maybe the Exchange Stabilization Fund was present today? Were those some of the market structures that tamped down? I don't know. Later on, he did mention, it's a shame, apparently his internet connection is about as good as the CFTC's regulatory service. So it kept chopping out, but it seems as if he said the agency took the steps of margin hikes, this and that, to control the price of the volatility of what could have been a worse situation. When a regulator says we took steps to control the price and volatility, you can make a Sarbanes-Oxley or this or that. That's price fixing.
Yeah, I hear you, mate. So yeah, your basic assertion is that there is manipulation of the silver market. And why don't you clarify for the audience, what is this manipulation, right? Is it only one direction? And if it is the case, what is this compelling evidence, right? Because I have, another guest a former guest on our show has really encouraged gold bugs to avoid this assertion. His belief is that it's a myth. So how do you push back against this, this dismissal?
First of all, you're welcome to mention his name if it's someone I know.
Keith Weiner. Keith Weiner. He's openly written about this plenty of times.
Okay, well that's fine, because I've offered him the chance to explain his comments. I offered to bet him some silver on it that I could prove him wrong. I never heard back after that. So anytime Keith Weiner wants to discuss this, or actually here, I'll leave an open question. 10 ounces to Keith Weiner if he can explain to me how after a 3-day period where the commissioner said he was scared, the LBMA wrote a report saying they were scared. They said they had 360 million ounces left, and after 3 days, 120 went into the trust. We don't even know how much physical was purchased. It could have been 360 million total, so they could have been another weekend away from running out. Yet after these 3 days, the price was actually lower. And in fact, on February 2nd, which set records in the history of the Silver Trust, prior to January 29th, I think the record must have been like 20 to 25 million ounces. Then January 29th, SLV reports adding 34 million ounces. On February the 1st, they add 20. And then on February the 2nd, when the price of silver falls 10% in a day, they add 61 million shares.
Yeah, so
can I just finish, okay, in case Keith isn't clear yet? Then, so the price falls 10% on the day that they add, basically, aside from the Friday before, what would have tripled the record for ETF additions, not last year, in the history of the Silver Trust, in existence. And then you have record buying from physical. Andy Schechtman gave me a quote he said I could use if I had to go to court. By far the most silver they've ever sold in a single day. By far the most call volume they've ever had in a single day. And they would have sold more if they had enough people to answer the phone calls. Then on February 2nd and February 4th, Jeff Curry of Goldman Sachs comes out and says it's impossible to force a short squeeze because of the position limits, which his bank regularly violates, I might add. I followed up on the CME, and we can get into that and what they said about that one. And here's the thing. I'm wondering, on February 4th, Jeff Curry also had the bizarre statement of saying the shorts are the ETFs. They buy the physical and go and hedge by selling COMEX futures, but it's a trust. Customers are buying silver because they want silver exposure. There's nothing if there's anything actually for that trust to hedge, fine. If you get your $25 from the customer and you haven't purchased the silver yet, you would buy a long hedge to maintain that exposure while you're making that bridge. There's no conceivable legal or economic thing they could hedge. He was putting stuff in there that he thought nobody would ever slow down and hear. And even if you don't like that one, Keith Weiner, in the SLV prospectus, it specifically says that they do nothing with COMEX futures. And lastly, the only thing I can guess is the reason Jeff Curry of Goldman Sachs didn't do an interview with this same, I don't know if it was intentional or a mistake, but it was market moving information. And maybe the only reason he didn't do an interview on February 3rd, because that's when they were changing the prospectuses in the middle of the night, putting language specifically to protect them against a short squeeze, which when I called iShares for 40 minutes on February 5th, trying to find the audit that their representatives can't find, they didn't mention anything about that. When I called them back a month later, I said, how did you let your customers know that you changed the prospectus? They said, well, it's on the thing. It's uploaded on our site. Okay, so all those investors, as long as they're clicking refresh to check the date of their prospectus every day, they can know that in the face of a short squeeze, when Jeff lied about, he said the flows weren't that big, they were record setting. They were blowing the LBMA out. Goldman Sachs is a member firm for the LBMA, so these guys all lied. Commissioner Benham, they have an open investigation. They can't tell me if they've even looked at the evidence I sent, but at the Boca Raton Futures Conference, he says that. So if Keith Weiner ever wants to discuss that, let me
comment on that.
We're going to have to arrange one of these, Chris. Okay.
Sorry for getting excited, but
I'm going to put this in context for our viewers, what Jeff Curry said. Jeff Curry in an interview said that there was no hope of their silver squeeze because the market is that much larger. Okay. fair point, right or wrong, fair point. But then he said that these silver trusts or the ETF, as soon as they buy the silver, they go in and short it to hedge it, which is ridiculous. Obviously, there's no reason to buy a silver trust that's going to neutralize the effect of your investment, despite the fact that it violates the prospectus. But so there were three options here. Number one, he was lying. Number two, he was ignorant. And of course, this is a Goldman Sachs commodity expert. How you can be ignorant in that respect, that ignorant is hard to imagine. Or three, the custodian, and I think Chris knows what I'm getting at here.
Maybe it's a requirement for the job, Brian, but
well, that's true. But the other third option here, which is intriguing, is that the custodian for SLV, the iShares Silver Trust, is J.P. Morgan, who was convicted or admitted guilt for rigging the precious metals market, at least through spoofing. That maybe what they do is they move their physical holdings into the SLV vault, then essentially short the market as soon as they move those holdings to lock in the price of what they sent to the SLV. And so maybe it's JP Morgan that's actually the one shorting the market, therefore neutralizing the effect. The key to this is that at that point, it wasn't widely understood that you shouldn't invest in SLV if you're going through an ETF. You should probably invest in PSLV, the Sprott Silver Trust, which has allocated gold and actually allocated silver, actually moves the metal into the vault and locks the vault behind it and has your name on the specific quantity of that silver. So people now have realized that and are now focusing more on PSLV, and that is where I think the rubber meets the road on this whole thing. If you're buying physical coins and bars and taking possession, that affects the retail market, which is all great and good, and it's wiped out all retail supplies. Part of that is that the mints aren't really good at inventory management. But if you get that big bar, the institutional level demand, and start wiping out those supplies by buying PSLV, then that's where I think there could be an effect. And Rick Rule has, in some of our interviews, has said that market is actually getting tight. What happens, Chris, when PSLV, when the Sprott Physical Silver Trust can't find silver at the price that it's being quoted on the COMEX and says, well, we've got to bid up to get that supply? And what happens when we see that effect on the silver market? I think that's where the thing could, the COMEX end of it at least, could start being driven by the physical market.
I mean, the LBMA told us how close we are to that point.
Yeah, you're right. They did. They said that they were essentially out of silver the last time we had that crunch, or very close to being out of silver in the London Bullion Market Association, where, by the way, there seems to be at least some degree of double counting involved on this silver, some degree, huh Chris?
These are the questions I've asked Keith Weiner, Jeff Christian. Brian, actually, maybe you know this one. I've read in Jerome Smith's book. Did you ever meet Jerome Smith?
No, barely missed him.
I mean, but he seemed like he knew what he was talking about. Like it wasn't some fruitcake. He was just mouthing off. He actually says, he actually quotes Paul Sarnoff's book, who just, I don't know, unless Paul Sarnoff is just BSing all the way, just by looking at the titles of the books he's written, it's like, this guy was talking about options before put call parity was derived by Black-Scholes. So seems like he knows what he's talking about. Didn't finish the book yet, but Paul mentions, and Jerome Smith quotes in his book, that Jay Aaron was one of the big shorts in 1980. I asked Jeff if that was true and if he'd be willing to answer that in a court of law. There's no answer. So we'll leave that aside, because the point, I'm not trying to speak about other people, but except when people give information that I believe is knowingly false and designed to mislead people and to be a part of. And then I ask the questions. Perth Mint, hey, you said you have plenty of silver, but then you're putting limits on the bars. Dick Hayes says this. And then I ask these questions that show that, here's his customers emailing me. Why are they asking me why they can't get their metal?
Well, Chris, we're tight on the end of the show. Now, let's assume that the listener is persuaded by you and he accepts or believes the idea that there are fractional reserves to ETFs, or let's say digital versions of these precious metals.
And definitely COMEX.
Yeah, two, that there is manipulation. How can the individual investor, use this information to his advantage?
Well, I think when you understand how the market is actually set up, all right, and the point isn't to cry about manipulation. Hey, it is what it is. I wish things were honest, but when you understand why the price keeps dropping at these bizarre times, when you understand that on February 2nd, which was possibly the greatest single day of demand in history, that the price fell 10%, and you ask why, when you hear what Bart Chilton, a former CFTC commissioner, confirmed, and you ask why, that, at least for me, it makes my life pretty easy, because I don't really, because I follow it. It's interesting what the price happens, but the things, it's the paper silver market is a Ponzi scheme. It'll go when it goes. Maybe it'll be this year, maybe it'll be 20 years from now. And here's the best part. People, I don't ask, please don't buy silver because of anything I say. That I will guarantee you that would be a terrible idea. But if you want to know why I buy silver and why I don't know, I have some cryptos. I bought something, it was like 7 cents and it's gone up since then. But other than that, the money I get, I put into silver. I buy silver options. I buy silver stocks. If you want to know the reason why I do that, is that I look at how I see these reports that 40% of the dollars created in history were made last year. They don't seem slowing down. As Joe Biden, 2 trillion at a pop, 4 trillion. Just read a headline this morning. Credit Suisse, or one of the banks, looks like their Archegos lost 2 billion a month ago. Now it's up to 10 or 20 billion. It's a Ponzi scheme, and unless people are going to stop using the thing, I would suggest that maybe here's the best. Sorry, I do have an answer. I would say that the people that I've found who actually understand anything remotely about what the Fed is actually doing, those are the ones who flock to silver. And whenever that unravels, that's when you're going to see some wild things happen in the silver market.
Okay, well, we need to cut it off there, Chris. Go to arcadiaeconomics.com to learn more about Chris's work. We always have the links, and I'll get Daniel, our editor, to put in links to some of these terms used by Brian and Chris. For our show notes, go to goldnewsletter.com/podcast. Otherwise, Chris, mate, it was too short. Maybe we'll have to arrange a debate with Wiener one of these days.
Well, that would be fun. And actually, to help, I did just write a report, which is a letter that I'm sending to the CFTC that has links, evidence, data that if anyone can explain, and if you want, I can send that over, and perhaps folks watching today, if they'd like to know more and why I say these things, I'd be happy to share that for anyone who's interested to see the truth.
Right on. Thanks, guys.
Thanks,
Cheers.
Chris.
Thank you.
Appreciate it.